In this video, I would like to respond to a question that Mr. Brad has raised yesterday about the future of gold and silver and why I said they are both going to crash with stocks. So, to understand the future of gold and silver, it's helpful to start with the stock indices because they share a similar signal. So, here we have the inverse index for the SPY, and we can see on the quarter chart that there is a similar buy signal as in October of 2007. And now if we go to DULL, which is the inverse of GLD, we can see a similar signal here. And we can also see the same signal on ZSL, which is the inverse for SIL. So you might ask at this point, what could cause such a movement in both the stock market and gold and silver? Well, there are two risk factors that I would like to bring up in addition to the government debt issues that I mentioned earlier. One risk factor that I see other than government debt lies in the private credit loans, which reached $1,800 billion in 2023. This mainly blossomed after the 2008 financial crisis when all the banks were facing tighter regulation in granting loans, forcing businesses to seek credit elsewhere. And the interest rate was so low at that point that investors were seeking higher yield elsewhere in higher risk products such as private credit loans. And another risk factor is the government reopening. And you might ask why the government reopening is a risk factor. Well, during the government shutdown, a lot of the data that was supposed to be released are all being backlogged, and they are all due to be released upon the government reopening. And so the market will potentially have to bear the impact of all those data all at once. So it's a good idea to keep track of what kind of data was supposed to be released during the government shutdown. And so you have a good idea to gauge the impact that the market will have to bear upon the government reopening. And to help you keep track of all the data releases on a weekly basis, I post a video every Sunday of all the data that are scheduled for the following week. And of the data that are missed so far, they include the initial jobless claims, the non-farm payroll, and the CPI and PPI data. And I'll certainly keep you posted as we go along.